Okay, everyone, good afternoon, and thank you for joining us today for the Garden Savings Annual Meeting. Just a few housekeeping items on our agenda for today. Make sure my screen is shared. Yep, okay. During the course of the meeting, we will be going over some reports, and we will be asking for motions from the floor. To make a motion, wherever you see your Zoom toolbar, could be at the bottom, top, side, there is a raise hand functionality available. So as we ask for motions to be made, we ask that you utilize the raise hand function to show your motion. And at any time, if you do have some questions, there is a Q&A option in the toolbar that allows you to type in the questions that you have. And as those come in, we will do our best to answer them. So those will be found on your toolbar wherever you see it. Okay, so I am now going to turn it over to Paul and share with you our agenda.
Okay, you can see the agenda here. I'd like to call the meeting to order. I'd like to welcome everyone to our virtual annual meeting, second one we've had, since last year. I'd like to welcome all the attendees, and I'd like to introduce at this time the board members. My name is Paul Mercer. I'm chairman of the board. Brian McGrory is the vice chair. Kind of wave your hand, Brian. Ron Lichkowski is the treasurer of the board. Mark Lorenzi is not able to join the meeting today, but he's on the board. Jessica Gonzalez. Jessica, you can raise your hand. Lou Viteri, who is also acting secretary of the board. Lou is acting secretary because unfortunately, one of our beloved board members, Gary Nichols, unfortunately passed away about 2 months ago. So we all, loved Gary very much, and we're all going to miss him. So he will be eventually replaced by another board member, but in place of him, Lou is acting secretary for now. I'd also like to introduce the executive team. Lou is our president and CEO, chief executive officer. Nick Biasin is our executive vice president and COO, chief operations officer. Lynn Dockrell is our VP and CFO, chief financial officer. Mike Powers, our VP and CSO, chief sales officer. And Gail McNaughton is head of HR and the executive administration assistant. So I'd like to, at this point, to request a motion to dispense with the reading of the minutes from last year, since copies were previously provided. Okay, I see a motion from Tony and a second from Mairead. I'd like to request a motion and a second to approve the 2020 minutes. Okay, I see a motion from Mairead and a second from Tony. All in favor, say aye. Okay,
Aye.
That's carried. At this point, I'd like to introduce Ron Lichkowski to provide the treasurer's report.
Thank you, Paul. Good afternoon, everyone. As Paul mentioned, I'm Ron Lichkowski, treasurer of the board of directors. It's my pleasure to review our financial results for what was a very turbulent pandemic year. And we're going to refer to the 2020 financial report that Allison's put on the screen. So our comparative statement of financial condition, or balance sheet, shows during the pandemic, our loan origination slowed. And although we wrote $105 million in new loans, our loan portfolio grew by only $1 million net in 2020. Deposits in the credit union grew by $35 million as slowed consumer spending and government economic incentive payments combined to increase the rate of consumer savings. This trend was consistent across the majority of US financial institutions. As our share growth outpaced loan demand, we purchased $22 million in additional investments, and cash on hand increased an additional $13 million. Our retained earnings remained flat compared to 2019, but the increase in assets due to share growth decreased our net worth to asset ratio from 8.8% down to 7.9%. At this percentage, we still remain by definition well capitalized under our regulator, the NCUA's guidelines. Turning now to the comparative statement of income for the years ended December 31, 2020 and 2019. You'll see that 2020 resulted in a net loss of just under $600,000. Loan interest income decreased by $150,000 this year as loan originations slowed and market loan rates fell. Despite our growing investment portfolio, investment interest decreased due to falling interest rates, and our average investment yield fell from 2.14% for 2019 to 1.4% for 2020. Although we did lower our share dividend rates in 2020, the overall growth in shares meant that we paid our members $165,000 more in dividends than we did in 2019. So overall, net interest income decreased $700,000, primarily due to falling rates. Our loan loss provision expense was about $500,000 higher in 2020, but our net charge-offs for the year were much lower than in 2019. We grew our loan loss reserves by $1.2 million in anticipation of higher charge-offs due to anticipated loan defaults caused by the pandemic. And so far in 2021, these losses have not come to pass, and we've worked with many of our borrowers to reduce or delay their payments during this difficult time. Non-interest income decreased by 15% due to our members' decreased use of credit cards and our overdraft protection products during the pandemic. To offset the impact of lower income generated during the pandemic, operating expenses were strategically cut by $500,000. Employee cost decreases reflect a freeze in hiring and reduced incentive payments. Marketing spending was reduced by 30%, and lower loan costs are in line with the decreased loan volume. Other assets held for resale were written down to their net realizable value, which lowered income an additional $364,000. The resulting net loss for 2020 was $600,000, but much lower than our Q1 2020 pandemic forecast. And of course, the reduction of our operating expenses helped to soften and mitigate the extent of the loss incurred. In all, every aspect of 2020's financial performance was impacted by the pandemic. Fortunately, going into this year, we were well positioned to face the challenges the pandemic presented. Our balance sheet remains strong, and our asset base is strategically diversified. We continue to serve our membership even while many other financial institutions closed branches and went fully virtual. Our members have shown their trust in us by depositing even more of their savings. We will continue to safeguard their wealth by continuing to operate in a safe and sound manner while offering the best rates we can. And at this time, I'd like Allison to open it up to any questions you might have.
Please feel free at this time to use the Q&A portion of the toolbar to submit any questions that you may have. At this time, no questions have been submitted.
Okay. I think that, thank you, Ron, for that report. And I want to congratulate the Garden Savings Credit Union for really performing in a stellar way in a very difficult situation. You know, we started before the pandemic, we were a very strong credit union, and coming out of it, we were also strong, thanks to the very hard work, dedication, and agility of the credit union team. We were able to keep the business going well and to help out our members who needed help as we went through this. So again, thank you very much. At this time, I'd like to ask for a motion to approve the treasurer's report. I see a motion from Tony and a second from Mairead. Need a motion to, all in favor, say aye.
Aye.
Okay, treasurer's report is approved. At this time, I'd like to call on Lou to give the president's report.
Thank you, Paul, for introducing me. I'd like to start off by just thanking all of our members, our board, and our staff for attending today's virtual meeting. I appreciate the fact that you're taking time out of your day to participate. And I'll apologize also for having to hold this meeting in this forum. As those who know me best know that this is not my preferred method of having an annual meeting. I'd much rather be in person. And I'm hoping that next year we'll able to get back together in person again. I'd also like to take a moment to pay my respects to Gary Nichols. As Paul pointed out, he was a very valuable member of the Garden Savings family. He served on our board of directors ever since our merger with Morristown Federal Credit Union, and he was instrumental in helping us to achieve that merger back in 2013. Not only was he an important board member, but he was an avid advocate for our members. He always made sure that the board and the executive team did what was right for the members, always questioning us to make sure that we had the member in mind in every step that we took. And he was a treasured friend. He will be missed by all of us here at Garden Savings. And while he was taken at too young an age, I will say that his impact on the credit union will be felt for many more years to come. In addition, I'd like to thank Ron Lichkowski, our board treasurer, for his summary review of our financial picture. As Ron showed you, 2020 was a financially challenging year for the credit union. And unfortunately, the challenges are continuing into this year. The past 12 months have really been very difficult, personally and professionally, and not just for me and Garden Savings and the members here, but for the entire world. As we dealt with the virus, the coronavirus, the confusion, the fear, the death that it caused. And we now try to establish what I hope is a new normal that has resulted from this pandemic. This annual meeting is just one example of what parts of the new normal are going to look like. But as I look outside, as I'm talking on this meeting, on the Zoom call, it sure feels like things are getting back to an old normal in many respects. You can feel the improvements happening rapidly as infection rates decline, deaths from the virus decline. People are allowed to gather without as much fear of becoming sick. The weather is improving, allows us to spend more time outdoors while we get back to enjoying life with family and friends. I don't know about all of you, but it sure seems to me like everyone's mood is improving and the pandemic seems to be disappearing right before our eyes, thanks to the vaccines. Whoops. I hope this long-lasting change is for the better, for good. When I look back on the events of this past year, it's an obvious statement, and I'll make it anyway, but nothing was more impactful than the COVID pandemic. Actually, in my lifetime, there have been very few events as impactful as the pandemic. But in addition to that, we were dealing with quite a few other things. A presidential election that wasn't very presidential and resulted in a major shift in power in the United States from the Republican Party to the Democratic Party. We had an insurrection at the Capitol in early January that also was unparalleled in this country's history. Throughout the year, there was social unrest, violent protests, an economy that basically shut down for much of 2020, a stock market that's turned into a roller coaster ride of late, and last but not least, interest rates that are remaining at historic lows, which anyone in the financial services industry knows makes it very difficult to be profitable as an institution. All of these events have had a significant impact and are continuing to have a significant impact on Garden Savings, our employees, and our members. Financially, we struggle throughout the year, as Ron just showed you, but it could have been worse. When the pandemic hit, we originally projected that we could lose over $1.4 million due to the impact that we were expecting. But we managed our way through that by taking several steps to curtail that loss and we reduced it to about 600,000, all without significantly impacting our members, our employees, or our future. Despite all of these calamities and the resulting toll on our financial performance, Garden Savings was always able to be here for our members. We never lost sight of why we are here. We fought hard and adapted to the situation quickly so that we could continue to serve our members while also keeping our employees safe. While many other credit unions and banks closed their doors to their customers, we did not. We always found ways to make sure that our members received the service they needed during the most difficult times that they were living through. There was a time we could not allow members into our branches due to the virus transmission concerns, but we found ways to continue to serve our members through makeshift walk-up windows and drive-up windows. It was an innovative way to keep serving the member, but we evolved. Not only do we keep our doors open and allow our employees or members to have access to their money and to our employees, but we went much further by providing many members with financial relief during this very difficult personal times. We granted loan forbearances to over 1,700 of our members. Those forbearances lasted anywhere from 2 to 4 months and covered $45 million in loan balances. That's a really big number for us. It's about 20% of our loan balances. Our members really appreciated the approach and the financial stress relief we were able to provide them. And I'm happy to say that they showed their appreciation by making their loan payments when they came out of forbearance and their financial situations improved. As a result of that, we managed to keep our loan delinquencies in check and improved our average total ratio, which is a measure of charge-offs and delinquencies, to 2.55% versus our goal of 3% in 2020. That's really hard to do when you operate a subprime lending program. In addition, we converted our workforce to a combination of an on-site workforce and a remote workforce so that we could keep our employees safe while also serving the membership at all times. We had no idea how to do this when the year started, nor did we expect we would have to do this. But as we said, we evolved, we came up with inventive ways to continue to serve the members, and we achieved that. Members said we did a pretty good job because they rewarded us with an average net promoter score of 72 for the year. That's really good. Our goal is to be at 65. 72 is much better. We continue to work diligently on improving the member experience. And right now we're in the middle of a continuous employee training program with the goal of making the member experience as pain-free as possible. We also have trained several of our staff to be universal employees so that we can more efficiently respond to members' questions and needs when they have them. We also last year implemented a new loan origination system and a new member sign-up platform that allows members and potential members to perform more tasks online at their convenience, when they want it and where they want it, which proved to be very beneficial during the lockdown period that we had last year. We also started a new member onboarding program to welcome new members, explain the benefits of membership, and answer any questions that they may have. Really like a welcome wagon for credit union membership. It's been very popular with the members. We also made several enhancements to our core system functionality, which makes it easier for our employees to do their jobs in a timely fashion. In addition, and most recently, we converted our entire debit card program from a Visa platform to a MasterCard platform. And while it had some bumps and bruises along the way, we know that ultimately that will serve our membership well into the future. So these are just a few of the things that we addressed throughout the year during the lockdown. But all in all, I think we had another outstanding year, despite the challenges that we faced. As for 2021, we're always going to continue to look for opportunities to improve our products, our services, and our member service delivery channels, while we also explore areas that will result in improved performance that benefits our members as well as our employees. Two items that I want to just mention right now that we are working on is number one, first is converting our entire credit card program to a MasterCard brand program. It will have enhanced benefits versus our current program, including a cashback option, as well as a more robust rewards program. Unfortunately, this program is being delayed until the end of the year or the beginning of next year. We had planned for it to happen in June, but due to circumstances well beyond our control and with our supplier, we've had to delay this program. But still, a lot of effort is being put into it. Second, we are also conducting member education sessions to help members with financial matters of interest to them. We're doing this in the community right now through Zoom meetings, but our hope and our goal is to improve their financial livelihoods by giving them the tools they need to be successful. Fortunately, we have built a strong institution and that we will be able to withstand the headwinds we continue to face in this challenging environment. But as you've all heard me say many times before, I really believe we must continue to grow or we will begin to die, and we must continue to evolve or we face the prospect of extinction. Right now, I am confident that Garden Savings is well positioned for continued growth, evolution, and success. I'll also open this up to any questions that anybody may have that's on the call.
So Lou, we do have one question that's come in, and the question is, what investments are being made in cybersecurity protocols?
We have been diligent investing in cybersecurity for the last several years. And we have a technology committee of the board that oversees our technology advancements. We use third-party vendors to monitor our systems at all times, to do penetration testing, to try and hack into our systems, to make sure that we have the tools necessary to protect our technology. This is a huge concern for us, given the fact that everyone seems to be getting hacked all the time, and we are stewards of our members' money, and we have $400 million on hand that we are protecting for our members. We have all state-of-the-art equipment. I can't explain in detail what it is, but I can tell you that we spend a good part of our budget on technology and protecting that technology that we offer to the members. I hope that answers the question.
At this time, if anyone has any other questions that they'd like to submit, the Q&A option on the toolbar is available. All right, and it does not look like we have any other questions at this time.
Okay, well then in closing, I'd just like to thank our members for continuing to do business with us. I want to thank our volunteer board of directors for donating their time, their talents, their wisdom, and their friendships while providing the strategic direction that drives us to succeed. And lastly, but certainly not leastly, I want to thank our employees. You are the engine that drives our success, and you are what makes Garden Savings a better place to bank. Thank you all for your time this afternoon, and I wish you and your loved ones good health, good times, and much prosperity throughout the year. Thank you.
All right, thank you, and thank you, Lou. And I'd like to thank the executive team for excellent performance and for putting up with Lou for another year. So at this point, we want to move on to the nominating committee. I have from the nominating committee the nominations. I have Ron Lichkowski for a 3-year term, Brian McGorry for a 3-year term, and Paul Mercer for a 3-year term. And since there were no other competing nominations, I request the secretary cast a single affirmative vote for these nominations. Thank you. At this point, I want to ask if there's any old business. Okay, I don't see any. Any new business? All right. At this point, I'll ask for a motion to adjourn this annual meeting. I see a motion from Mairead and a second from Tony. All in favor, say aye. Okay, we are adjourned. Thank you all very much and have a good day.